Welcome to The Explainer. Today we're digging into the U.S. farm economy. And, behind the big headline numbers, there's a really fascinating story unfolding. A story of two completely different agricultural worlds that are heading in opposite directions. So let's get into it.
Right, so if you just look at the top-line numbers for farm income, you are going to miss the real story. The truth is, the health of American agriculture isn't just one simple picture. It's really a tale of two farms, and their fortunes couldn't be more different right now.
And this is the heart of it, right here. On one side, you've got the farmers growing our essential crops. Think corn, wheat, soybeans. They are feeling a serious financial squeeze. But then, on the other side, you have cattle ranchers, and they are in the middle of an absolutely unprecedented boom, seeing profits like never before. Okay, so let's tackle the first part of this story, the incredible pressure that crop producers are under. We're talking about the folks growing the grains that are, the foundation of our entire food system. Just look at this chart. It's not a gentle slope, it's more like a cliff. You can see that profits for major crops like corn and soybeans hit this massive peak back in the 2021-22 season. But since then, wow, it has been a steep drop. And to put a number on that, we're talking about a 50% plunge. The projected net returns for these big crops in the 2025-26 season are expected to be just half of what they were at that recent peak. That is a massive hit to profitability in just a couple of years. So what's going on here? Well, it's a classic economic problem that folks in the industry call the squeeze. Basically, the prices farmers get when they sell their crops have dropped like a rock. But their costs for everything like seed, fertilizer, fuel, those costs have stayed stubbornly high. And that gap between falling income and high costs is what's squeezing their profits to almost nothing. And this chart for corn farmers just lays it out perfectly. The bars show that for years, the revenue they were making per acre was comfortably above their basic costs. But look now, that gap is projected to basically disappear. It means there's barely enough money coming in to cover the cost of just growing the stuff. Okay, so take everything we just talked about, and now let's flip it completely on its head. Because for cattle ranchers, it's not just a different story, it's the exact opposite.
I mean, talk about a reversal of fortunes. While crop profits are tanking, look what's happening here. For cow-calf operators, these are the ranchers at the very beginning of the beef supply chain. Their net returns are projected to hit this massive, historic spike in 2025.
And let me be clear, we are not just talking about a good year. The projections show nominal net returns are expected to hit all-time record levels. They have literally never seen profits like this, ever. So why is this happening? It's a pretty straightforward story of supply and demand, really. For a while now, things like major droughts have forced ranchers to shrink their herds. That means today there are just fewer cattle out there, which leads to a tighter supply of beef. But at the same time, people still want to buy beef. So less supply plus high demand, well, that equals record high prices and record high profits. Okay. So let's zoom out a little. We've got these two totally different things happening on American farms. But what does that mean for the bigger picture? For things like government spending and taxpayer dollars. Whoa. Okay, you can't miss that, right? That giant spike in the bar for 2025. What that represents is a massive but temporary surge in federal spending on farm programs. And to put a number on that spike, the total projected government payout for all farm-related programs in fiscal year 2025 is a staggering $58.5 billion. That is more than double the spending in the years right before and right after it. So where's all that money coming from? Well, the main reason for that huge jump is one single piece of legislation, the American Relief Act, or ARA. This act set aside a one-time pot of $31 billion for disaster relief and economic aid. As you can see from the projections, it's a temporary boost, and spending is expected to go right back to normal levels the next year. All right, this is the part where it really hits home. What is all of this, the crop squeeze, the cattle boom, what does it actually mean for you, for your wallet, and for your next trip to the grocery store? Well, the forecast suggests we're going to see overall food prices tick up a bit in 2025 to about 2.6%. And most of that increase is coming from the food-at-home category, which basically means the prices you pay at the supermarket are expected to climb a little faster. And the reasons why connect right back to everything we've been talking about. That record-breaking cattle boom, well, that means more expensive beef at the meat counter. On top of that, outbreaks of avian flu have really hit the egg supply, pushing egg prices to record highs. And then you have pork and poultry prices, which are also staying high, all adding up to a bigger grocery bill.
Okay, and for our final point, this is probably the most important thing to keep in mind. Everything we've looked at is a projection. It's an educated guess. It is not a prediction set in stone.
You know, the authors of the report that all this data comes from, they're really direct about this. They actually include this powerful reminder saying their 2022 forecast couldn't possibly have known that Russia would invade Ukraine, an event that just completely turned global food markets upside down. It's a really humble way of saying, hey, the world is unpredictable.
So to handle all that uncertainty, they use a pretty clever method called a stochastic baseline. Now, in simple terms, instead of making just one prediction, they run 500 different computer simulations, each with different possibilities for things like weather or global demand or 100 other variables. The charts we've been looking at, they're the average of all those 500 possible futures. It's a way of planning for uncertainty, not pretending you can predict the future.
And that, of course, leaves us with the big million-dollar question. These projections show us the most likely path forward based on what we know right now. But we live in a world that's full of variables. From a sudden drought somewhere to a new global conflict, the only thing that's really certain is that there will be another unforeseen shock. The real question is, what will it be? And how will it change this tale of two farms all over again?